Welcome to a journey of possibilities, where dreams are transformed into reality and the heartbeat of Africa's potential echoes through its riveting cities. I am Lerato, your guide to a world of opportunities in the realm of equity investing as relates to real estate. As we saw above these vibrant urban landscapes, remember that every skyline you see represents untapped potential, waiting to be harnessed. Africa, with its rich tapestry of cultures and resources, is not just a continent, it's a dynamic force in the global economy. These bustling streets, these markets alive with activity, they tell a story of resilience, innovation, and growth. And guess what? Equity investing is our vehicle to becoming part of this transformative story. Picture this: your investments making an impact, your financial future secure, and your legacy leaving a mark on the African landscape. That is what equity investing can offer and can offer you. Throughout this journey, we will explore not just the what and how of equity investing, but also the why. Why it matters for you, for your family, for our communities, and for Africa as a whole. So fasten your seatbelts, because this isn't just going to be about watching. It is about participating, learning, and thriving. Welcome to another episode where we learn how to create wealth through real estate investing. As the introduction had shown, there is so much diversity, opportunity, and potential in us actually striving to own parts of our cities by equity investing. One question that people always tend to ask me is, but why are you advocating for me to own little bits of different projects as against owning a whole project all by myself? Today, you're going to also be getting the answer to that question if you stay on maybe to the end or almost to the end. So now let's get started on the basics, introducing or me explaining what equity investing is all about. In its simplest manner, equity investing is like owning a piece of something. So imagine that we have a big complex, or let's even use a shopping mall, for example, or even a residential complex of apartments with multiple units of apartments. Now, that will be a full-on project, as against where the project is looking to sell each unit of apartment to specific individuals or people who are interested. All the people that would be investing in that project are people who are not necessarily interested in living there, but they are interested in getting a piece of the pie in terms of the business that project can do. So a project would have multiple units of apartments. Let's even put a number and say 50, but they are opening up the opportunity for up to 200 or 500 of you to be able to own little bits and pieces that you are going to be the one who determines how much, in terms of how big or how small your own piece of that pie is going to be. We can also equate it to a pizza. When you think about a pizza will be a whole circle of 8, sometimes 6 pieces and all. But in the event where you are saying you don't want to eat a whole pizza by yourself, or you don't want to have to pay for a pizza by yourself, and you ask friends to come together and say, guys, let's go and buy a pizza, then each of you is eligible and you are entitled to a piece of that pizza. And that is technically and very simply what equity investing is all about. So when we talk about equity investing for real estate, we are only just changing the big thing that it is that each of you would be part of the investment for, and all of you would then be entitled and allocated your own fraction of that investment. Now, because equity investing is a terminology, it could also be a strategy for some people. The idea of equity investing can also be explained or tagged or labeled by many different words. Some of them could be co-ownership, some of them could be co-investing, and very simply put, in terms of technology, some of them could be called fractional investing. When you look out for what the names are, don't get confused in terms of the names. Think about what is it that they're actually doing. What do you get? What are you entitled to? What are you able to benefit when it is that you're thinking, okay, I am doing fractional investing? What are you getting? These are the things that should really matter to you, and not necessarily the umbrella name that it is or what it is that it's called, because the umbrella name is just what it is, a name. What would be to your benefit would be what is in it for you. So if we're going to talk about what's in it for you, I would be having to explain some of the benefits or the advantages for equity investing as would relate to you. And I'm going to try and personalize these as much as possible. Now, one of the advantages that would come in with equity investing would be the opportunity or the enablement for you to create wealth. Now, wealth creation is something that a lot of people, they misunderstand, or they assume and presume that it is what you are actively working at that you use to create wealth. It doesn't have to be so, because we found out that the smartest millionaires in this world don't actually do hard work to make the money that actually makes them the millionaires. What they have are assets. Now, for you who is considering the idea of you want to be a millionaire, you would also have to borrow some of these things and some of these smart tips and strategies to use for yourself. And this is what equity investing does for you. Typical example, let's say that you are invested in an apartment block, a real estate project, where they are offering a certain percentage of returns from your investment. You would also be knowing that because it's real estate, that you would not only be getting the returns, but you'd also be enjoying capital appreciation. Capital appreciation in the sense that if you put in ₦1 million today, you know that over 5 years, 10 years, that ₦1 million stops being ₦1 million. It could probably even go as high as becoming 10 million, depending on different factors to include inflation, appreciation of the property, growth of the area, and all of those factors. But you would also know that in as much as that property is gaining appreciation, you would also be earning a piece of the rental income. So if you're also somebody who maybe has a full-time job, you don't necessarily need the money that is being generated from these investments for your everyday life. Say for you to go and replow or put that money, recycle it back into something or an investment or a high yield savings account would be very high. Now, you who does that, or you who opts to do that, it means that you know the power of compounding interest, because when you take the first dividend that comes in and you put it into something where either it's a high yield savings account or it's another investment, you know that you're going and you're continually multiplying that. It just continues and it becomes a cycle where money just keeps being created, multiplied, without you actually doing anything. So you would look at it and say, you've made that first investment, or you've made a series of consistent investments, and they have created this fund that you're now able to also go and put to work without you actually doing anything. That will be the simplest benefit of equity investing as relates to wealth creation that you can come about. Now, the second one would be the fact that you would be earning passive income. And I've touched on it a little bit earlier on, because passive income would be money that you are paid for work that you're not actually doing. Now, people think of real estate investing as not being passive because you have to do the work. You have to find a tenant. You have to market the property. You have to maintain the property, and all of these many things that seem to go with managing a real estate portfolio. Now, because you're an equity investor, part of the sell and the opportunity is the fact that the only work you have to do is in the beginning, assessing the investment, assessing that deal. can that deal do what you are being told that it will do? Will this deal actually give you these benefits that it is? So essentially, all you have to do and invest in would be the cash that you're going to put down and the time or the effort to be able to do the due diligence. After you do due diligence and you've put your money in, you literally go to sleep. Why? Because everything is going to be done, handled by professionals who that is their job. That's their day-to-day job. And in this instance, they are just coming up together to do it for all of you who have put together the funds for the developer to actually make the property. And then somebody who's going to be the marketer or the promoter to keep on managing that portfolio, managing that investment, and sending the reports back to all of you who are investors. So think about it. I mean, another way you can think about it would be shareholders of a company, and you don't work in the company. The company goes out and does the work. The company sells whatever products it is that they're selling. They hire people whose job it is to make sure that those products sell, those products are developed properly, they're designed to suit the market, and all what's not. You as a shareholder, you sit back, relax, and keep enjoying your dividends. The same thing is what it is, whether it is real estate or it is technology or it is anything it is that you want to think about. But this unique position that equity investing with real estate brings is the fact that most African countries have an escalating demand for housing. So where people are not necessarily financially buoyant enough to own all the houses that they're going to live in or they stay in, there will always be that demand for houses that people need to rent. People will need to rent their homes. People will need to rent their offices. People will need to rent spaces for the gyms, the restaurants, everything. So real estate gives you, somebody who is considering equity investing, that unique edge to be able to quadruple or multiply what your returns can and would be as a successful investor. So when you think about all of these things, and then you think about what is the potential of me actually becoming a millionaire because I'm invested in real estate, I'm hoping that all this explanation that you are getting is helping to make it more visible, because it actually is very interesting to see when people actually do it, and then all that they think about in 5, 10, 15, 20 years is the fact that they didn't necessarily have to do the work, but they owned assets, investments in all these projects that have now yielded so much money for them that they can also pass on to their kids. Now, if you're also somebody who is looking for a legacy, or you are looking to start accumulating money, maybe money for a trust fund or education fund for your kids, I mean, equity investing is definitely one way to go. Why? Because all the money that keeps coming from all of these investments, you can just keep putting them away. Remember the example of putting it into a high yield savings account or into new investments that will keep multiplying. So that's one way in which you could actually not have to think about the fact that you have to fund your child or your grandchildren's education in future. Or you could just think of, okay, I'm going to have this wealth that my children can start their own lives with, and you would then be having a legacy that you're not only acquiring for yourself, but one that you are also able to pass down. And then your kids can also learn how to create a similar legacy, not just for themselves, but also for their own kids, which would mean that your entire generation can be set for life just because you decided to take action on equity investing. Now, another way that you could actually be creating wealth, or you would be creating wealth because you're equity investing, would be the fact that you are not going to just be investing in one type of property. So let's take a typical example of an equity portfolio that is able to host and show you options for a residential project, a commercial project, a school project, or a shopping mall. You now have options that you can actually think about and say, okay, I have 5 million naira and I'm going to put 2 million naira into residential. I'm going to put 1.5 million naira into commercial real estate. And I'm going to put 1.5 million naira also into the school project, which would be school accommodation. Again, it's accommodation, but it could just be a hybrid. Now, this is you with 5 million naira that normally would not even have been enough for you to buy a house, or maybe just to buy one plot of land. That would not necessarily do much. But this is you taking 5 million naira and you have spread it across 3 viable options of real estate that will continue to create wealth, create income for you without you actually doing any work going forward. Now, if that is not something that you would be interested in or excited about, then there's a tendency that maybe you do not even like real estate investing as a whole. Because even investors who do investments across asset classes generally, they would always want to say, what percentage of my portfolio is this particular asset class? And then they would look for a balance across asset classes that they like. Now, this is you having the idea or the notion that you want to just invest in real estate, but you have the multiple options that you can diversify your portfolio on. So if you are thinking residential properties, people would need a house, houses to stay, people would need houses to rent. That's good. That's on one side. People always need houses to rent. Now, if you're also going to be thinking about commercial real estate, you would then be thinking, but sometimes there may be need for a closure. People can opt not to go to work or opt not to go to a certain place, or rental demand for that thing may change over time. That's a possibility, but at least you know that if that happens, you also have the other asset class in real estate to rely on, housing. Then you also be considering the fact that you're also invested in student accommodation. Now, if you look at it, you would say that if we're going to use the Nigerian market as a typical example, you would know that people almost always need a house to stay. So there will always be that demand for rent. Now, people may not always want to do their business in a commercial space because they'll do it also from home. But those who do would use it. Now, in the event that that is not always going to work for you, maybe the complex has to close down for renovations and it's going to be closed for a certain period in time, that's not necessarily a loss in revenue because you also have something else that's still paying you, but the value will still be going up. Then if you think about student accommodation, we all know that students are not always in school. So there will be those months in which it is that you are not going to earn from your student accommodation investment, but chances are that when you will earn, you would probably make up for it. But if you are this investor who then has that diverse range of classes in your portfolio, at least you know that your portfolio would enjoy some level of balance, which ensures that every month something in the very least would come in. So that's the beauty of diversification, and that's the beauty that equity investing in real estate also brings to you and offers you as somebody who is looking to create wealth through real estate investing. Now, when we think about all of these factors, one thing is key: the fact that you have to be strategic. You're going to have to be strategic in the choice of what it is that you're investing in. You're going to have to be strategic in knowing what exactly it is that you need to be able to achieve. And you also need to be able to set your budgets. Now, if you go into equity investing without having a budget or without knowing what it is that you want to be able to achieve at the end of that entire journey, chances are that you would feel unfulfilled. Fulfillment from investment doesn't necessarily always have to be about how much it is that you've made from the investment, but the fact that you know that your investment has actually grown. It has achieved either the particular or specific need that you wanted it to achieve, or it has at least helped you to ease the burden of making certain payments that you would have been needing to make in the near future. For someone who's looking to invest for on the basis of creating a legacy, then you also know that this would have to be something very strategic, because you'd have to ensure that every month you are optimizing when and how much and how often it is that you're actually getting money coming into that fund. And you would also be having to consider the fact that your plans have to be very long term. You can't think short term, because this is not going to be money that you want to be touching too often, or you want to be moving around. You want things that you're going to make the decision to invest in, and they would actually play long term. So understanding how these different classes factor in for you, or even into society, would be something that you would really want to be able to do. And all of this would come back to strategic planning: how you choose your options, how you invest in your options, how much of your portfolio it is that you put and you extend or stretch into each or any of all of these options. All of these things would matter, and I'm hoping that as you keep going, you can start to make a plan for what it is that you would want to invest in, how it is that you want to invest in, and how much you would actually want to start being invested in any of these things for. If you're getting value from this video, I'd really like to hear from you. What is that one thing that you have learned, or one thing it is that you want to stop doing, or one thing that you now see that you should probably do more of? To just take a minute and just comment down below, write it out, say what it is. You know what they say about things that you think, or things or ideas that you have. It is when you have written them out that you would only be able to really start achieving them. So tell me in the comments, what is that one thing that you've either learned, or you want to stop doing, or you want to start doing? And let's see how it is we can bring all of it together and actually make it work. So if you remember how when I started out this video, I said that there's one question that people tend to ask me and say, but why am I advocating for equity investing in real estate, where you are having to own a part of a city or a larger perspective as against you owning one thing? Now, in Africa, we all like to have this ownership. We want to know that we own our own asset, we own our property, we own our portfolio, we own the things that we are actually paying for. Now, what do you think would make you feel more comfortable? Would it be owning one house by yourself, or would it be you owning a piece or a fraction of something which is much larger than just that one house, and you don't have to do the work for? I know that for some people, the importance of owning that structure is always going to be very important for them. And it's also going to be possible for you to be able to do those kind of negotiations and have that kind of ownership structure in projects that you will be equity investing in. Why? Because you would then be coming into the deal. So remember what I said, you have to know what it is that you want. When you come into such an equity investment, you would be able to ask and say, if I want to own a fixed percentage of this thing, which would probably give me access to one flat or one house or one office or something, you could actually do that. And that just means that your equity investment would now rise to the fraction that will give that particular part of it. And if that is you, then you also know that you not only own it by yourself, but you're not having to do the work, and you're probably going to be earning so much more than when it is that you're owning that one asset. A recent study by one of the authoritative bodies that are into consulting, I don't want to name names in this video, but there was a report that was recently put out, and it talked about how we have so much dead capital in property that people have in their villages or in their hometowns or in cities that it is that they hardly go to. Now, from a feel-good perspective, that's fine. If you know that you are wealthy enough or financially buoyant enough to be able to do that, then that's well and good. You can do that. But if you are living in today's world where literally every dime literally counts for how much it is that you can make it work, how much it is that it can yield back for you, then you might be wanting to reconsider making such investments. And if you're going to even need to make such investments, then you can actually come together with friends to be able to make them. Think about the fact that where you are having to go to your village and build a house all by yourself, and then you're thinking you need somebody to be going there to watch it or to take care of it and all. On the other hand, you have come together with 3, 4, 5 friends or cousins who also want to own property in that area. And each of you is then coming together to say, how do we do this? And each of us owns our space. You would find that options like that actually cost you less and have less hassle on you in the long term. So when you're thinking ownership, you're thinking inclusion, you're thinking diversification of portfolio, you're thinking long-term benefits, you're thinking wealth creation. Equity investing is actually that thing that you could actually turn to be able to achieve that goal for yourself. So with everything that we've talked about today on how equity investing, or what equity investing is, how it can help you to create wealth, how it can help you to build a viable portfolio for yourself, or how it can even help you to create a diversified portfolio that would work for you, we've come to the end of today's episode where we have spoken about all of these things. And I am hoping, against hope and more hope, that not only would you take these tips and take these learnings to heart for yourself, but you would actually make a plan to start implementing them. I'm hoping that I'm going to be able to drop the link to a journal or a workbook that would actually help people like you who want to start investing in real estate to be able to do it easier. So it would probably have a step-by-step guide, which also would be breaking down all the elements that we've spoken about in this video and helping you to practicalize them so that as you go along in your journey of wanting to create wealth through real estate, that you would actually be able to do that much easier and with a strategic guide. Now, this guide would be available in the co-investment community that we have, because that is literally where we help and we guide you and we work with you to ensure that you are able to do this. And I'm going to leave the link to the community in the caption so that you can actually gain access from there and enjoy all the beneficial guidance, tutelage sessions, much like this, that you will be able to get. My name is Lerato Lekena-Okoro. As you know, I am a property investment broker based in Lagos, Nigeria, and my joy would be to help you create wealth through real estate. Until next time, when I come up with another video, and maybe even a continuation to this one, adios for now.